Generating traffic and sales can be a challenge for online merchants. But selling on the Walmart Marketplace puts your products in front of millions of customers who shop on Walmart.com. And right now, sellers who join Walmart Marketplace can save up to 50% on referral and fulfillment fees for the first 90 days. So get started today. Head over to marketplace.walmart.com/savings. That's marketplace.walmart.com/savings. Welcome to E-Commerce Conversations, a weekly podcast from Practical E-Commerce, hosted by entrepreneur Eric Bandholz.
What is going on, Internet? Eric Bandholz back again with another E-Commerce Conversations. I hope all is well on the other side of the Internet. On the other side of the Internet, from me, Molson. What's up, man?
Not too much, man. Happy to talk to you.
Oh, yeah. Yeah, it's been a long time. I think the last time we hung out was for that hike that you organized.
Yes, yeah. And then I don't know. This is the second time I'm on Practical E-Commerce. I don't know how long it's been.
Oh, it's been a while. So we were talking on Twitter. If you don't follow Molson on Twitter, he is a worthy follow with some nice hot takes. For listeners who maybe didn't catch that first episode or don't know who you are, give a real quick rundown of who the hell you are.
Sure. I founded an e-commerce company many years ago. Been doing this for over a decade. And I also, at one point, used to do intellectual property trademark enforcement as well, but I'm no longer doing that. I founded a company called Edison. So two companies are Viahart and Edison, and that's how I'm on Practical E-Commerce, because they're both e-commerce focused companies.
Did your brother take over that and you just stepped out of it, or did you guys shut it down?
No, it's still going forward. My brother is now the full-time CEO, and I no longer have any shares, and he's stewarding the business going forward.
Sweet. Well, the impetus of this is I'm having a pretty tough year. I've been pretty transparent with all the problems we're facing at Beardbrand, and it seems like despite solving a lot of our issues, we continue to struggle, and it's gotten to the point. It's been, for me, it feels like it's been about 2 years of proper suffering. And I think you're currently dealing with struggles a little bit different than me, like, because you're primarily Amazon guy, right?
Well, I don't know too much about your struggle specifically, but that sounds to be exactly the same as ours. Today, every month, I tell my team what our sales were this year versus last year. Same month, same time. And our sales were down something like 14% year over year, including all the different platforms we sell on, not just Amazon, but also our DTC websites. And like the worst thing about that is that's a comparison of June 24 to June 23. June 23 was down something like 7% versus June 22. So 2 years of pain and suffering is also applicable to what we've been experiencing.
Yeah, and I think one of the problems that I personally have is like when things aren't working is when I'm really the most tinkering. And I feel like I start tinkering and I probably would have been better off just leaving it alone. Like trying to find my way out of this has dug us deeper into a hole with some of the decisions that we've made. And like, what is your strategy? Like, is your goal to write it out, or are you guys trying to figure out? I know you're testing TikTok shops and other platforms.
Right. So I'd like to hear what you've been doing, but we have actually experienced growth in a bunch of different areas. So the tinkering that we've been doing has been working. The problem is that the success we've been having has not compensated for the losses that we've mainly had on Amazon, but also Walmart and eBay. So yeah, we started selling on TikTok Shop, and in June, I think we did something like $7,000 worth of revenue. In May, that was zero. So that's actually really great, because $7,000 in June for us as a company that sells educational toys It's going to be like 30 to 50 each month in November and December. And that helps. But the problem is the Amazon sales are down, the Walmart and the eBay sales are down. And we've been doing a lot of wholesale, and that's been growing as well. But again, not growing enough to compensate for the weakness that we've seen on Amazon.
Yeah, we did a lot. So we changed our packaging, we changed manufacturing, we, kind of changed marketing channels as well. Like a couple of years ago, we made a commitment to like double down on organic YouTube marketing as a platform for us. And execution was not successful. So like our YouTube views effectively have gone down in half, if not more. So it's like we're no longer bringing in the same audience that we used to bring in on YouTube. And then we tried getting into ads again, and ads just, we can make it work, but not at a scale that we need it to work to get to the revenues that we want to be at.
Well, I mean, so even though we sell superficially wildly different products, right? Both of our products are highly discretionary. And when the cost of food has gone up, I don't know what it is, 20, 30%, I don't know over what time period, you cut things. Consumers cut things. And so I think we've actually done a decent job at tinkering and optimizing. I mean, perhaps we could have done a better job on Amazon, but there definitely does seem to be some economic weakness that is hurting discretionary brands like ours. So I wouldn't be that down on yourself for what's happened.
Yeah. How long do you think this, I mean, none of us can predict the future, but how long are you willing to ride the wave, I guess is a better question.
What do you mean by wave?
Well, I guess it's not the wave, the doldrum. Like just how many years do you think you can suffer with it going down?
So this podcast is called like Practical E-commerce, but neither of us are actually pure e-commerce companies, right? So, I mean, I don't even think of our business as an e-commerce business anymore. To me, an e-commerce business is like Amazon's e-commerce business, or even TikTok Shop. That's an e-commerce business. To me, we really are brands, and I like our products. I like the value that they give to customers. And in the short term, sure, there may be some pain and suffering, but provided that we don't run out of money, and I don't think we will. I mean, we still manage to be profitable. We're just going to keep investing and keep innovating and keep delivering to value to our customers. And if that doesn't work, well, that's then I don't know what to say. That's like it's almost like it has to work in the long run, provided that we can survive. I mean, without getting too much into strange long-term macroeconomic factors.
Yeah, I mean, like we're on the other end. Like we're no longer making money, and last year was a bloodbath. This year started off nice, and then it quickly continued. And there gets to in our business, it gets to a certain point, like there almost is no more cuts to make. Like you can't build your business out of cuts, or the cuts that do come are the really painful ones, like the ones that fundamentally change your business and how it's structured and all that. So I've been like kicking that can down, like wondering, like watching the bank account get a little smaller each month, and then just like wondering, will it change?
So that's different.
Yeah.
Right. So the way I think about it is I think about it in terms of competitive advantage. So we sell a bunch of different products. Rainflakes is a building toy. It has a utility patent, and it's got pretty strong brand recognition. Then we sell Aquapella, which is a swimming kickboard, and it's the best-selling swimming kickboard on Amazon, which is viciously competitive, and it does not have the brand recognition of like a Speedo. Then we sell Heart, which is a line of plush animals. And then we also have Goodminton, which is a brand of active play. It's a racket game. It's very fun. The plush business is the plush business, and to some extent the kickboard business, it's focused mostly on distribution and offering high quality products at low prices to the customers. The plush have beautiful, excellent designs, but it doesn't have, in theory, the same like moats that Brain Flakes has, right? So there's no utility patent. And I'm sure plenty of people do search our brand name, Heart, but not to the same extent that Brain Flakes does. So for me, not to the same extent that people do for Brain Flakes, which is, it's got some good brand recognition. So for me, it's like, I'd probably be willing to lose money for longer when it comes to something that's got the patent and got the brand recognition than I would for something that's more distribution and just like price quality oriented. I mean, but the designs of the plush animals are good. I don't want to give the wrong impression. Does that kind of make sense?
No. I mean, everyone's going to have their own risk tolerance for stuff. Like if you have a connection to your brand or business and you see it as you see a vision bigger than it is and a potential bigger than it is, you're going to be willing to suffer longer, I feel like, versus someone who's coming in who did some keyword research on Amazon 5 years ago, and you're like, oh man, no one's got a kickboard, so I'm going to do a kickboard and take that opportunity. And then 5 years later, all these Chinese sellers come in there and just becomes a bloodbath in pricing or however. I don't know exactly the story of your kickboard, but I'm sure there's similar products like that where entrepreneurs see opportunities, they take advantage of those opportunities, but they're not married to those opportunities.
It's a bloodbath.
Yeah.
It's a bloodbath on Amazon. And even if you have like a really nice brand name and a utility patent, it doesn't protect you from the margin compression that's happening. Like it doesn't matter if people are searching your brand when Amazon won't show the search results without you paying Amazon to appear, right? And then like it doesn't matter how great of a brand you have. I mean, Nike and Apple are perhaps exceptions to this, but like everything below Nike and Apple, you still have to pay the constantly increasing fees that are happening on Amazon, which are just eating into profitability. So it's a difficult situation. So how did we end up selling kickboards? Again, like I think our kickboards are good. We put a lot of time and effort into it, both from a price quality standpoint, but also a design standpoint. It kind of is what you said. There was a time and place where you could just make money selling on Amazon, selling anything. Just like did not matter. You just threw up a listing, whether it was like cups or pillows, like you were making money. And so there was a time where we were selling like, I don't know, 50 different product types. And every time competition came in, you would just like cut the losers as it shifted from profitable to unprofitable. And somehow we managed to, no pun intended, stay afloat with regards to kickboards. I don't want to be negative, but it just realistically speaking, I would be much more comfortable to just lose money on Brain Flakes than I would be on Aquapella kickboards because of those theoretic, like long-term moats.
Yeah, I mean, for me, we had a conversation with our partners. We do it every 2 weeks. Are you in it alone, or do you have partners?
No, just me.
Okay. And I was talking about like if it continues, like I'm willing. Like I feel like Beardbrand, where it's at now, like we fixed a lot of our major issues, and it's a good company, a good brand, good products that has a good pathway in the future. And it's something that, if it means pulling out of my personal savings, putting it back into the business, which is, if you think about it from a point of, or from a lack of confidence, you don't want to have the business that has helped you create wealth take all that wealth away. Like there's something about like being bad that if, let's say, like, cause we're bootstrapped, we don't have any fund, what they call it, debt or VCs or anything. So like the way Beardbrand shuts down is, we scale down to one person and then I'm no longer having fun and we cut it off, The alternative is like we start putting money back into it, keeping the team as it is, like paying for the costs as we can, and then, evaporate my personal savings to try to keep it afloat, and then it goes down, which is not really, when you start thinking, like when your mind goes to that dark spot, like you don't want to do that. So I don't know if like you guys, like how do you maintain your drive or persistence, or do you get into those dark spots where you feel like it's hopeless at times?
I think the only way to avoid hopelessness is to just continuously iterate. And that doesn't just mean opening up TikTok Shop and getting an account on Target and selling to a few more stores. It means like being hyper creative about the things that you're doing. So it feels, with our sales falling, it feels like we're starting the business again, because it took us like 3 years for us to achieve profitability. And during those 3 years, you were just, I don't know what it was like for you and Beardbrand, but for us, it was throwing everything at the wall to see what would finally stick. And we're basically doing that now. And if you just keep on throwing things at the wall and those throws are not too expensive, then you maintain hope, because there's always something else that's going to, as ridiculous as it sounds, there's always something else that's going to save the business. So like we are making inexpensive cardboard displays where the interlocking discs that form brain flakes can be played with by the customer in the store. Because while we do sell brain flakes to stores, the sell-through is good in certain types of stores, namely like teachers, educational focused stores, but it's not great outside of that vertical. And so what are we doing? We're effectively iterating on the packaging. And we're just doing like many things like that all at the same time and not committing too much money to it. Because if we commit too much money to it, then it's psychologically bad, and anything that you throw against the wall is unlikely to work. So you just have to have like just dozens of these things at the same time. And the thing that actually makes me most worried about this business in the long term is I just don't see a reason to be optimistic about US consumer purchasing power in the long run. And it's just hard to internationalize any business. And that's something that gives me a lot of pause. And something else that actually brings me to a really dark place is looking at statistics of births, because we sell educational toys, and it doesn't matter how amazing our latest innovative products are, right? It doesn't matter whether or not you increase conversions on your website, if no more children are being born, like globally, that's an issue. And that sends me to a dark place. And, but I mean, that's a tough one to solve. And, but again, my solution is like, okay, well, maybe we don't just need to make educational toys. And so we have this team and we can start doing other things. But obviously humanity does need to continue to make kids, one way or another, because, we'll die if not.
Yeah.
As
I
a
mean,
species.
It becomes, it becomes that shrieking pie. It's like, the horseless carriage or whatever, those companies that sold, wooden wheels. And, either at the end of the day, either the business has to change to serve the audience, and I think where I struggle is like, how much of it is, macro in my space, like are fewer guys growing beards? Is it because, purely financial reasons, or is it competition, that's out there? Or, like, was it a trend that I was on and we kind of hit the peak and there's not that much growth? And, from my perspective, like Beardbrand's such a small company. Like I find it hard to believe that we're anywhere near the top, but maybe it's just that, I think they call it like a red ocean where everyone's just fighting over a smaller and smaller audience until people get pushed out. But that, like, I think my concern with that is like, I don't know how to build a company in that environment, like in a super competitive, cutthroat, shrinking pie kind of environment.
Well, I don't either. Well, I mean, I think you and I could both put our heads together and we could come up with like a reasonable strategy that would be probably profitable, right? Something probably exists, but that's not the only question. The question is, can you be motivated to do that?
Yeah.
Right?
Can you
Because
enjoy it?
entrepreneurs, yeah, do you enjoy it? And then also, when you're an entrepreneur, you need a little bit of naive optimism or something like that. Like, your goal is not to, because entrepreneurship is risky and is difficult. So there needs to be like a big payoff, and you need to be excited about that big payoff. And a declining red ocean market is enormously difficult to be excited about. And so that's the other problem. So even if you can come up with like a theoretically profitable strategy, there needs to be some reason for you to get up in the morning and to fight through that, because it's going to be a lot more difficult than working a job.
Yeah, it's been really. I mean, it's tested me. You asked earlier about how Beardbrand grew, and we were very fortunate. And essentially, we tried a lot of different things to see what stuck, but along the way, I would say we were profitable the whole way. Like, our first unprofitable year was last year, and so it's kind of like, to hit an unprofitable year in year 11 after 10 years of profitability, it really kind of has you questioning everything, your abilities, your talents, your vision, your customer engagement with the brand, and all that. And, for me, like, I'm like you, I do get excited very easily for like new products and new things. Like, we have a new deodorant coming out. We have new fragrances coming out. We have things that we're working on that I am very much excited about. And you kind of mentioned, like, you take risks, but risks that don't put the company out of business. But at the same time, you might, like, in a declining business, or at least what I'm seeing is like, these new initiatives get so small that you no longer hit the scale that you can to do the MOQ. Like, if you're running an MOQ at the factory, then you're like, all of a sudden it's like, wow, this is no longer a small risk for us. It's a big risk. And I don't know if you've gotten to that point or if you've been in that position before.
I mean, it depends on what you launch, right? Some things just have large MOQs. Like, if you wanted to make like a new hardware electronic, like, you're going to have to put some good investment into that no matter what. If you want to make a packaging modification, not so much. But I understand what you mean. And sometimes also, even if you do have success, the success is so incremental that it doesn't save the main portion of the business that's declining. The other thing that I would touch on, building on what you said, is that you don't actually necessarily know what's causing the business to decline, which is really frustrating. I mean, you can come up with like a list of ideas, but like, we were just bouncing that off. Was there a trend for educational toys that's not there as much, or are fewer people being born, or is the economy just bad? Depending on what the root cause is, each of those has a different solution, and it's hard to figure out. It's not clear. And then on top of that, and this is why this conversation I think is great. Like, we're real talking it. But if you go on to like social media, it almost still seems like 50% of the people who are talking out there, at least 50%, maybe 60%, are being like, oh, I'm still crushing it. What you don't know is, like, they'll be like, oh, my sales are up. Like, but maybe at the same time, their advertising is up more than their sales, or maybe they just launched like a huge amount of new products. And if they actually had just kept the same number of products, their business would be down. And then on top of that, people whose business is not up are just not talking.
Yeah.
So it just seems like there's more success than there is actually. And that also weighs on your psyche, because even though business is supposed to be about numbers and cents, like, there is like a human element, like a competition element, and people seeing all this talk about how there's continued success, it's like really frustrating. It makes you question, as you said, your own abilities, which doesn't help you develop, like summon the confidence that you need in order to try the next thing, right?
Yeah, I mean, to a certain degree, it's like you just have to be dumb enough to like power through and not even think about things not working as a connection to your own efforts. Like you almost need to be able to separate your ego from that.
You need to be able to like trust the process, irrespective of the short-term results.
Yeah.
But what do I mean by that? Like, you need to say, I have a high degree of confidence in the long-term profitability of launching a bunch of new things at low MOQ and low cost. And I know that if I launch 10 things, one thing is going to work. When the first 4 fail, like you just have to say, well, that's part of the process, and you keep going. And if the first 10 fail, even though you thought your base rate was 1 out of 10, you just have to say, well, like I was unlucky or something like that. And you just need to keep going and going until you hit that new thing that either takes over the last big thing or at least can cover for it 25 to 50%.
Did you see that article on like the zombie brands that was making the round on Twitter?
I did, yeah.
Oh, were you able to read that, or are you familiar with?
Well, I have like a low attention span,
okay.
But I did read it. I skimmed it, and I actually like made a list of the things that I thought were causing D2C e-commerce companies to be in bad shape, and I pulled it up. So one, if you look at the graphs, like consumer debt is peaking. So in like 2020, 2021, there was minimal consumer debt because you had all those stimulus checks, people paid down their credit cards and stuff like that. And now consumer debt is, I think it's near all-time highs, something like that. Like there's an upper limit to how much people can put on credit cards. Food costs are up, salaries are not up as much as food is, so that really hurts discretionary purchases. No stimulus, no lockdowns. That's a big thing as well. Go back to the golden era, 2020, 2021. For us, I don't know if this applies to Beardbrand. Container shipping prices are up, right? So you have the blockage in the Suez Canal, which causes all the ships to go around Africa, which increases the prices. And then prices are nearing like 2021 levels now. And that's a huge problem and increased costs. Facebook and Amazon have gotten pretty good about squeezing additional profits out of the businesses that depend on them for demand. And you have continuous improving Chinese competition. You have subsidies from businesses like Temu, subsidies from Shine, depending on what you sell. And to me, like the only bright spot that applies to American D2C e-commerce in the past like year is just TikTok. And TikTok is subsidizing. So that's something to consider.
Yeah.
What do I mean by that? I mean, like you can, we got like a nice boost of sales from TikTok, but part of that is that TikTok is subsidizing the sales that are occurring on their platform. So if you are not selling on TikTok, like that will actually hurt you.
Yeah, you're giving up free money. TikTok's paying for it. It's unfortunately we haven't been able to get that same traction on TikTok. I think what was interesting about the article was it was from the perspective of like a VC, raising money. You've never had to raise money, have you? Or are you?
No.
Yeah, you're
I mean, one thing about the TikTok, sorry, and then I'll let you go, that you might find interesting is that we started with the Brain Flakes brand, and it's possible that there's some sort of like quirk in terms of like, it's very hard to start up these TikTok shops. You have to like shut them down, start them up over. It just didn't work. But then once we switched to plush animals, it worked really well. But sorry, I just want to say that because it connects back to like I was getting despondent about TikTok, and then I was like, hold on, let's just try something else, and that worked. But back to VC. Never had to raise myself.
Yeah. And I'll echo what you said about TikTok shops. Like we tried with pushing products to our store, beardbrand.com, and now we're trying pushing products to Amazon.com. and seeing how that works. So we are
Wait,
trying.
are you not doing it like in the app?
No. We use TikTok Shop app, but it's our
Oh,
products that we have offered on Amazon versus our products that we have offered on beardbrand.com, which
oh,
are different
okay.
products. So it's like lower price point and stuff like that. But yeah, it is through the app. And then, so the VCs, I don't know that space very well. It's really not of big interest to me. I can see how when you have third parties at play in your business, how you lose a lot of control over whether or not you allow that brand to continue to exist. Because like you and I feel like we have the resolve to suffer for a long period of time, knowing that we continue to do the things that we do, we will eventually pull ourselves out of it. Whereas I feel like if you're running a business backed by investors or you have partners who aren't bought in, then all of a sudden people want those resources redirected to something else. And I feel like that's where you're going to see a sea of closures in the space is probably more likely in the VC space than in the bootstrap space. But then again, if you're bootstrapping and you don't have any cash anymore, what's the difference between a business that is open and not doing any revenue and one that's shut down? It's like effectively the same thing too.
Yeah, I suppose that's a silver lining for us. So like in theory, if you survive long enough, your competition will be minimized, and so supply will go down and demand will return, and so you can return to profitability. But it feels like this has been going on for a really long time already, and I haven't seen a decline in supply. Something else worth noting is that when your competitors exit, they will exit in a way that in the short term will absolutely crush you. So, for example, Thrasio declared bankruptcy, if I remember correctly. Thrasio is that big Amazon aggregator, and they sell a lot of educational toys. So on its surface, you would think that would be good because now there are fewer educational toys being sold in the market, so then more people will buy BrainFlix. In reality, they had to clear their inventory. And so they started selling all their products at below cost. And it doesn't matter if their products are like low quality and not good. They're selling them at like ultra cheap prices. And so when someone's searching for educational toys, they're going to buy those products. And so that doesn't really help you. So I think it's possible that the worst is still to come. I mean, right? Like,
well, we're doing that very thing right now. Like this month, if you go to Amazon Beardbrand, all of our prices on our products are dirt cheap, insanely cheap, because these were Target products that we have to clear through before they're no longer good anymore. So I feel for my competitors, but it's challenging too because like we're moving up the rankings, which is nice, but at a third of a price. If we're not selling more than triple the amount, then we're at the same spot anyways.
Yeah, and it's not a good spot to be because it's not great for your brand, right? If your price point is lower, if it's something where price point matters as a gift or something like that. And then also, like, are you saturating demand for those products in the future?
Yeah. There's a lot of questions, and those are the things where I regularly second guess because it's like I've never been here before. I don't know how to clear out inventory, unsold inventory. I want to maintain, like, historically we've been able to eat it, but when you're running low on cash, you've got a year's worth of inventory from a mega retailer dropping you. It's been forcing us to make very hard decisions. In better times, I would have not done,
If it's any consolation, my mentor always used to say that inventory killed more Jews than Hitler. And he was referring to, like, basically that's how people end up going bust.
Yeah.
At the time, there were a lot of Jewish guys in this business, and there still are. And he was Jewish, by the way. But when something is not moving, like you at a certain point, you do need to convert it into cash, and there's solace in knowing that cash can become new initiatives. But It is like a really difficult situation to be in.
Yeah.
Like it happens to us all the time with products. I mean, not like some products, right? Like anytime you try something new, or even something you had something for many years, it was profitable, and then just competition came in or tastes changed. You have to chop price in order to turn it into cash, or just run out of cash, or just burn an ever growing hole in your pocket from storage.
Yeah.
Basically.
Yeah. Or pay to destroy it, pay to ship it somewhere else. There's no win. So the best win is, as lean an inventory as possible. Where can
It's
people...
impossible. It's just like realistically, like there's like a lot of like just in time inventory is like something that probably only exists in books.
Yeah. Or at such a high scale that you can barely produce enough. Like that is...
Look, I haven't verified this myself, but someone once told me that Toyota, which is like famous for that just-in-time inventory, the way that they achieve just-in-time inventory is just by storing all the inventory at their suppliers.
Okay, so they're buying it all, but it's just arriving
So,
in time.
so someone is storing the inventory. It just happens to be it's not Toyota because I don't know. Toyota is like Apple, Nike. They have some pricing power. They have some ability there.
Where can people follow you, buy your products?
Oh, where they can buy our products? Too many places right now. TikTok, it's brutal, right? Because every place is something that requires maintenance and attention. But it's just everywhere.
Yeah.
eBay, Walmart, Amazon, TikTok, multiple Shopify websites. We're trying to do international because I have some reservations about the long-term health of the American consumer. But it's working. But it's like that thing we were talking about before, where the success is incremental relative to the main thing that's declining.
Yeah. And then where do they follow you on Twitter?
I believe my handle is Molson, MOLSON, and then _HART, Hart.
There you go, guys. Molson Hart, thank you for coming back onto the show, Ecommerce Conversations. The next time we record this, we will be like rolling on some yacht or something and celebrating all the things that we've been through and those greener pastures that we talked about that we're working towards. So thank you for being on the show. Cheers.
Well, I'm just going to say one thing because some more thoughts. When I was starting this business, it was very different from Beardbrand. And like, I actually like thought about killing myself at one point because I was very young and like stupid and I wasn't successful and it wasn't working and I had put in multiple years. So that gives you perspective. Because I didn't kill myself and I eventually figured out how to get it to work. And like just both of us, man, we just gotta like continue to try new things and adapt. And that's just the way it is. And it's like, nature doesn't care about our feelings. Business doesn't care about our feelings. Our consumers don't even care about our feelings. So we just need to keep hacking away and keep an open mind. And that's how you get on the yacht.
That is very good advice. Great way to end it. Keep on growing.
All right, man. Thanks, Eric.